Hey guys, it is Julie here with TipRanks. Today we're taking a look at 3 basic material stocks with buy ratings from the #1 ranked analyst on TipRanks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. TipRanks was created to help track the performance of Wall Street analysts, helping to bring some accountability and also help you know who to trust. So one thing I love to do is check in with the top ranked analysts and see what companies they're paying attention to. And that's how we came across today's stocks. From our homepage, we're headed over to Top Analysts here, where we can see a ranked list of which analysts are performing the best. And newly sneaking their way up to #1 is Patrick Brown from Raymond James. So I want to look at his profile here. He currently is one out of over 8,500 Wall Street analysts with a success rate of nearly 80% over the past year, which is very impressive. Looking at his stock coverage here, what really caught my eye is that there was 3 companies that he had a 100% success rate on. So of course, you guys know the routine. We're going to take a look at these companies, what it is that they do, and how the Wall Street analysts are weighing in on the stock's future. Just before we get into that, this is a reminder to download the TipRanks mobile app if you haven't done so yet already to access some of your favorite research tools on the go. Links will be in the description down below. Now let's jump right into these 3 basic material stocks. First up is a company called Eagle Materials under the ticker EXP. They're currently priced at $187 per share, and they've seen some phenomenal growth this past year, currently up 67%. They are a leading manufacturer of heavy construction and light building materials here in the United States. Their primary products include Portland cement and gypsum wallboard. Further, its products are primarily used for infrastructure development and residential construction. Originally a part of Centex Corporation, Eagle Materials became a fully independent company through a spinoff back in 2004, allowing them greater flexibility to invest in growth opportunities. Over the years, they've increased their market share and increased company profitability through acquisitions, internal expansion, and facility upgrades. Their Q1 earnings report will be coming out soon on July 27th. Their previous one back in May came out with record results. For their fourth quarter, they reported earnings per share of $2.79, coming in well ahead of the anticipated $2.30 per share. Fourth quarter revenue of $470 million was up 14%. They also had record annual revenue and earnings per share at $2.1 billion and $12.46. And of course, following this record quarter, we saw many Wall Street analysts weigh in. The stock does currently have 10 analyst ratings, which currently breaks down to 7 buys, 2 holds, and 1 sell. Now, the average price target would be an upside of 5.55%, but let's take a closer look here, because a lot of those ratings did come in a couple months ago, and the stock has seen some notable growth since then. We do have our buy rating from Patrick Brown, which is now actually a downside as that price target has been surpassed. But looking at the more recent ratings, some coming in just today and yesterday, they're ranging from 9 to 20+% here. So I'm sure we'll see many other analysts weigh in as the earnings report comes up near the end of this month. Next up, we have Vulcan Materials. Their stock trades under the ticker VMC, currently priced at $224 per share, and this is another one that has seen some great growth this past year, up 53%. Vulcan Materials engages in the provision of basic materials and supply for the infrastructure and construction industry. They are the nation's largest producer of construction aggregates, primarily crushed stone, sand and gravel, and a major producer of aggregate-based construction materials, including asphalt and ready-mix concrete. Their coast-to-coast footprint and strategic distribution network align with and serve the nation's growth centers. They are an industry leader with a unique focus on aggregates, with aggregates representing 90% of their gross profit. In 2022, they shipped 236 million tons of the stuff for $7.3 billion of revenue. Their next earnings report will be coming up in a couple of weeks on August 2nd, and once again, back in May, we had an earnings beat. For their Q1, they reported earnings per share of 95 cents, well ahead of the anticipated 61 cents per share, and they reported revenues of $1.65 billion. Looking forward at the full-year outlook, Mr. Hill said that they're increasing their full-year earnings expectations. Their stock has attracted ratings from 13 Wall Street analysts, coming in as a strong buy. That is based on 11 buys and 2 holds, but once again, our average price target would not be much upside potential, just over 2% at $230. But once again, taking a closer look, that is because many of those ratings came out a couple months ago following that earnings, and price targets have been surpassed. That includes Patrick Brown, once again, who had a buy rating, but would now be over 9% downside. But once again, we have ratings coming in just today and yesterday with 11 to 18% upside, and many people increasing their price targets. And third on our list today, we have Martin Marietta Materials. Their stock trades under the ticker MLM, currently priced at $456 per share. And I know some of these are expensive, but don't forget, fractional shares do exist. And similar to our other companies, they've also seen some great growth, up 47% over the past year. These guys are also in the aggregates business, engaged in the provision of aggregates including crushed stone, sand, and gravel through their network of quarries and distribution yards. They operate through 3 different geographical segments with their Mid-America Group, Southeast Group, and West Group. Martin Marietta's Magnesia Specialties business produces high-purity magnesia and dolomitic lime products used worldwide in environmental, industrial, agricultural, and specialty applications. Martin Marietta will also be reporting their Q1 results on July 27th, and expectations may be high, as back in May they came out with a huge earnings beat, more than doubling on earnings per share expectations. For their Q1, they reported earnings per share of $2.16, so that was $1.18 ahead of estimates. They also recorded record revenues, profitability, and unit margins. Revenue came in at $1.35 billion. Their stock currently comes in as a strong buy with 12 analyst ratings, with 9 buys and 3 holds, and you might be catching on to a pattern here with these stocks today. Their price target of $467 would be a very slight upside at 2%, but once again, analysts have been upgrading price targets recently. This now has price targets from 8 to 16% upside, and the rest from 2 months ago had a lot of buy ratings that the price targets have now been surpassed. So there we have 3 material stocks, all with a lot of similarities here, and ones to watch as their earnings report come up, as we'll see these analysts start to reiterate a lot of price targets. Let me know your thoughts in the comments down below and what you think of these companies' growth potentials, and what analyst is your favorite to track on the TipRanks website as well. Always keep in mind these videos are never a suggestion to buy or sell any specific stock, just meant for information and entertainment and keeping you up to date with what those Wall Street analysts are up to. If you made it to the end of today's video, don't forget to hit that thumbs up button and make sure you subscribe to the channel as well. Thanks so much for watching, have a great day, and I'll see you back here next time.